love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up, it's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel like this, I'm immortal. 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 Don't stop, just level up, don't stop. I'm so gone, no I'm never turning back. I won't stop, I'ma fight until there's nothing left. It's so on, you're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong, you will never see me crack. And if you get in my way, you gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate I attack. And when I feel like this, I'm immortal. 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 Don't stop, just level up, don't stop.
Alright, let's get this show on the road. Hi everybody, I know I've been sort of gone for the last couple of days. Let's hope the volume is fine. It's because I've been having a horrible migraine that just wouldn't stop. So, now, let's get into this. I'm gonna try and make this banner disappear. Like so we can see the market. Beautiful. Let's see the charts, the beautiful charts. How's everybody doing? I hope you're doing well. Alex, oh my god, good to see you, brother from another Canadian mother. Haven't seen you in a while on the actual lives. I know you're always there and you always watch. Good to see you, brother. Why is this an emergency live? How come I'm doing an emergency live? What are we going to talk about? Well, let me get to show ya without wasting any time, and then we're gonna blab on and say hellos and all that beautiful stuff. Okay, so for today, it's pretty easy to tell that the market is trying to close today's gap. We kind of held back for a second there as we were passing through wherever the ceiling was. We're looking at, by the way, those who are confused right now, let me know if I am hiding anything. Hopefully I'm not gonna be. I'm gonna be smart enough to remember and show everything on the right side of things. And so let's remind me and tell me, hello Felipe, all of good to you. It is good. In fact, it's going to get a lot better. If I'm correct, what I'm about to show you right there. Hope you're well yourself. So let's look at this. The 1 minute is kind of insignificant. The 5 minutes kind of is a telltale sign and as a signal towards the closure of this gap. In fact, just yesterday, as I was speaking to my community, shout out to the community members, those who did not understand that that number, that promo code in the beginning, that BD50, that grants you 50% discount to the Patreon right now and Discord subsequently, and then you'll be able to participate in the weekly meetings and learn all about my hypothesis and understanding and reading of the market and analysis, and understand what it is that I'm talking about here, and actually gain a whole new skill set instead of just wondering and being reliant on various talking heads. So let's get back to the analysis. The analysis is that for the time being, looks like we're going to go down and complete the closure of the gap, which is insignificant. I mean, we've seen this happen quite a bit. Yesterday in the community, I've mentioned how far more likely than sooner than later we will see the closure of this gap, the rest of the gap that we opened up just yesterday. And we're probably going to close it very, very, very shortly, given how the momentum is panning out. Normally, it's very difficult. One of the more difficult things to identify, even for people who understand these tools to somewhat of a basic level, is that what is the next thing to happen. Basically, people are hyper focused oftentimes on what is going on, rather that what subsequently that means the next step is. And when we think of the next step, we realize that if we start looking at the various time frames, we realize basically the market wasn't even running on fumes at this stage. We are basically running on air at this stage. We have no gasoline in the tank whatsoever. There is no momentum on all fronts. It doesn't matter which technical tools you use to identify in this instance, the lack of momentum. And so let's continue. You can see already the 30 minutes is quite indicative for that turnaround, although still in bullish territory. Why do we say bullish territory? Because anything and everything above 50 is still, technically speaking, it is bullish, right? But we are seeing that we are bearish dominant in terms of leading force right now, and we're moving closer and closer. In fact, our K is already, as you can see, at that 38, already below that 50 range. It's only a matter of time until our D, our red line right here that represents the speed of loss of momentum, to be more precise about what it really means. And so we're accelerating. Our loss of momentum is accelerating. To simplify for us, sort of the retail traders, so to speak, it is the acceleration to the downside. Pretty simple, right? The acceleration into the bearish side of things. We are now at the top range. If we're looking at the 30 minutes right now, we're going to identify there is a top range to this diagonal channel that we have been subject to for quite a while. Pretty much all the way since August, right? As you can understand, we switch over channels. Now currently we are in the channel that we've been retaining for since the beginning of the month, basically the very same one. As you can see, it's not that of a long channel. That's why it's just so fresh and new. 30 minutes, as we said, is objectively bearish. 45 minutes is becoming overturning. Basically, we're seeing the convergence and divergence, the split of the forces, giving way to the D to become dominant. Basically, we're bearish dominant right now. Of course, still within the framework of overbought territory. At sort of at the straightforward point of view, overbought is good because we're extra bullish, we're bullish on steroids, but it also naturally means that can be the turning point where we flip over. And if we were running bullish so far, which naturally that's the only way we can find ourselves in overbought territory, now it's time to go for a cool-off period, which normally the cool-off period, which is the back end of the green bullish side, that would be red, and that will be bearish, right? The only question is whether it's going to be tame bearish, or is it going to actually accelerate and become even more and more deteriorating in terms of price action, right? In terms of deceleration and then depreciation in price. Now, if we want to objectively look at, again, as we said, we are now currently objectively at the edge of the channel, arguably so. We now just tested that edge of the channel again, as you can see, have been confirmed several times before, and we're now at the edge of that very same channel, moving within the framework of a very narrow channel, right, which brought us to that ceiling. And now we're starting to see signs of a breakdown of that momentum, which is very naturally how when we reach that ceiling, when the momentum peaks out, we're starting to see a breakdown of the momentum. And very similarly, so what we're going to be seeing here is basically a deceleration of the price action around that ceiling. It may still continue climbing slightly higher. In fact, I will highlight how there are far more important levels right above where we are. In fact, they stretch all the way to 6,500. This is a golden pocket on the Fibonacci retracement scale. Those who are familiar, it's not an important tool. It's a necessary tool to understand where the market is going from and to. By the way, while I'm talking, I see the market is continuing to deteriorate and close that gap. So pretty cool. On the 1 hourly, we're not yet full-blown bearish, but we're becoming slowly, we're sort of overturning and becoming more and more bearish as we're looking at the price action throughout the session, right? So this is indicative of a beginning of that overturning process, although as we know, it may take a little while, right? It can take, in fact, several sessions. As we can see here, for example, this process took the overturning from the 8th all the way to the 11th, right? So it may take a couple of sessions. But on that scale of things, it usually is predictive to nothing longer than just, a couple of sessions, really. 4 hours. 4 hours, we're not yet fully at convergence. We are now actually almost at that stage of convergence, divergence, basically where the forces seeing confluence and then break apart while giving way to bearish dominance. We are basically at the ceiling of the momentum, where we pretty much are. It's very, again, as I say, usually what it means, it's indicative of a loss of momentum, and so subsequently a beginning of a turnaround. SP still going? Yes, absolutely, Felipe. The prediction of the 3300 is predicated on the larger cycle that has been repetitive and consistent for the last 100 years, in fact. And so, of course, the path to 3,300 is not going to be straightforward. It's not going to be this sort of linear drop down and that's it. In fact, in my mind, we already began the turnaround when we had that first drop, that initial drop to, no, that's not the one I'm looking for, that 4,800. Right, I'm on the crazy me. Right, I'm on the wrong scale of things. But basically, when we saw that drop to the 4,800, that's that drop altogether, right? This drop when we saw that. Hello, Casey. Good to see you, brother. So, but again, follow me on this one, and you'll be able to understand where we are at on the sort of overall path of things. This is exactly what I'm trying to establish here and anchor the average observer, the viewer, those who are not necessarily in the Discord and follow me every single day, know exactly where we are in the path. And the problem is where we are in that overall path is that now it becomes slightly clearer and clearer, and normally the same way we move along, if it is a particular channel and that channel then switches over to something more flat, it's very difficult to identify that transition until basically we complete most of it, and then it becomes obvious that we are moving within it. What you are seeing here is almost, for example, that ceiling is that transition right here from how we go from a steep trend diagonal to the upside to something that is more flat right before the trend overturns to the back end of things. So what we're seeing here is exactly that flattening of the curve. Regardless, we are moving within the framework, right, of that structure that we've developed over time via the support and resistances and channels that are in place due to the price action we had before. It's pretty simple. Actually, it's a pretty simple idea and has direct connection to the cyclicality. Of course, if those who want to know more join the community, then you can ask, or you can just ask me. If you go, in fact, you know what, let me just show that for a second. I know normally I hate to do this, This is actually a great discussion we're having right now on Discord, just to kind of highlight what it is that we do on Discord. We're discussing anything and everything. I'm showing off charts, I'm explaining, breaking down things. They obviously are always the first ones to know. You have the academy meetings, the advanced meetings, all that beautiful stuff. But if you want to inquire about the one-on-one academy, which is, these are the testimonials of some of the members who already gone through the one-on-one academy. I know it's probably, I'm, as always, hiding half of it, right? So here it is. For example, I really want to show this one off. This is one of our members. This is Leo, who is basically saying here, as you can read, using the methodologies and the technical analysis tools, although he is trading options on a very quick day-to-day scale, basically he's a day trader, he was able to generate almost $200,000 within 31 days using these very methodologies. Now people say, well, I'm not a day trader, I'm not trading, I don't need this. No one says this is a tool for traders. These tools, the understanding of the overall technical analysis and where we're going, is necessary for anyone and everyone, regardless whether you are an investor or a trader. What it does, it allows you to read the direction of the market, whether it's a long-term or short-term, depends on what is convenient to you, right? So you can basically assess what is the most correct action given the upcoming scale of movement that you're seeking. If it's investment scale, if you're looking for years out, sure, you can identify that as well. Again, if that cyclicality means that every once in a while we have this very deep corrective movement that may take up to 10 years potentially, by the way, think about it. I mean, Greg is wrong. Greg doesn't know what he's talking about. Cool. I agree. I accept. No problem. But do you really think you know better than Warren Buffett? I mean, the legendary investor of all times that was willing to sacrifice average prices that he will never be able to ever get again, simply because these positions will probably never drop to these lows. So subsequently, he'll never get these averages that he now was willing to sacrifice for what he is expecting to potentially take quite a while and bring up a far deeper depreciation in price and the price action that people estimate. Otherwise, he would have been buying back already, right? It kind of goes hand in hand and makes sense, right? Good morning, hello, good morning, good afternoon to everyone who joined. Good to see you, everyone. I hope to see you in the Discord and the community. So, final note that I wanted to mention, there are plenty of reviews here, as you can see and read. Plenty of members who've gone through the academy and gained these skills and are now basically independent and can read the market on their own. Of course, we still do have weekly academy meetings that once you finish the academy, you gain access to. And plenty of other meetings and things and perks we have with the Discord. So I cannot just, stop talking about it. But the most important thing, without even the necessity of joining Discord or paying a single dime, if you really think that you want to, which, I mean, at the end of the day, the Academy is actually offered pretty cheaply right now. It is still $3,000, which is going to be, because now it's discounted, by the way, $3,500 is going to be moving to $4,000 eventually. Over time, depending on how the price, of course, changes. You can see I kind of broke down the details here. Now the price is $3,000 as it's discounted still until we move along to the new sort of scheme of things. What you can do is join in, and instead of seeing these channels, you'll still be met with Left Click Me and Need Help, right? So Left Click Me breaks down how you connect your Discord and your Patreon in order for you to be able to see everything if you're already a paying member, right? The Discord is 100% private, so we get zero harassments within the server. So all you need to do, of course, is follow these steps that you have on the Left Click Me channel. But if on the other hand you want to apply for the Academy and maybe inquire about the Academy, you go to Need Help, right? You'll see only these two channels. Imagine you basically join Discord and you see only these two channels unless you're already connected and are a paying member. So what you'll be able to see here is these two buttons. You'll be met with these two buttons, and if you just press Academy application, it will create an application for you. I will then address you. We'll have a call one-on-one, and I'll guide you to how you pay, how we continue, how we schedule your sessions, and all that beautiful stuff. Now, no contemporary soft inflation can stop the coming trend, right? Exactly. That is kind of in general what we're discussing here and showing, and partially I want to show off actually within the charts, and that's the beauty of the technical analysis. That is you see, at the end of the day, we can all sit here and debate what we think that Trump's tariffs are going to do, what the big beautiful bill is going to do, what the war in Russia-Ukraine does, what the supply chain disruptions that are still in place, what China affects, what Taiwan affects, all of that beautiful stuff, and many more things that are now at play right now, right? I'm not going to mention all sorts of interrogations and all sorts of crap and just overall mayhem and just inflation. Again, there are so many factors that are going on already as as we are. Completely insane PEs on various tech companies that basically are leading this rally. That is already, as we said, running on fumes, and it starts to be more clear and more clear with time. Oil prices, of course, given how central oil is and how it affects every other commodity and the whole supply chain and energy prices, of course, all of these things are interconnected and correlated and create a singular sort of chain of events that the outcome of is the behavior of the market that we're able to see now. Let me just remove some of that crap so we can see the charts better. Alrighty, cool. So where were we? We were saying we're 4 hours. Am I showing chart normally? Everything looks fine. I hope you guys can see everything the way it should be. Okay, it appears to be the case. Now, where are we headed? So we are on the daily chart, which we can roughly use to predict arguably a week we can have, depends on your technical analysis skills and abilities and know-how. So really where we are right now is basically at the junction of this median channel. This is the longer term one that we've been following for quite a while, and at the ceiling of the shorter term channel that moves within the framework of that one, and it basically is a junction, but that is not necessarily what is going to stop us. So remember, we have this one factor already at play, right? This thing is already at play. It doesn't matter what else we're seeing at the very same levels. It's accumulative, meaning you're seeing more and more things that are potentially going to affect the price action or stop the price action from continuing upwards, prevent it, and turn it around, right? So again, this is just one singular factor, and I want you to sort of pile them up as we go, right? In fact, for example, something I want to highlight and show, if we're going to go to the continuous contract and we really break down most important levels, way stations, if you will, for those who do not understand. By the way, those who wonder, yes, I already am aware of the very next support resistance level, the major one, of course, beyond that 6,500, which was just mentioned. But coincidentally, the 6,500, given that it's a psychological level, I know, but that's not the shtick here. You see, the problem is that psychological level is basically already right adjacent to a set of 3 levels, which you can already identify have been significantly tested over the recent period again and again and again. And the more you zoom in, the more clear it sort of becomes, right? Sorry, yeah, I'm going to show. Still not that far. Here it is. The further we go, the deeper we go. Basically, the clearer it becomes. The market is aware of these particular levels, and this is not a coincidence to those who think technical analysis is some form of rain dance, which is not. It's just the people who say technical analysis is a rain dance are the lazy people who want to try to find the easy way out. Of course, it's easy to, sort of shrug away. So, yeah, you see, the thing also, as I was saying, the reason we use these tools is because arguably we can sit here and debate what all these things will factored in together will do to the market, or then we can see what the market is preparing to do on the technical side of things, which is in essence a visual form of how the market is prepositioning itself towards forward price action. It might necessarily not be there all fully yet, right? But if you know how to use these tools, you'll be able to identify future potential support resistance levels and so forth and so forth. And so, yeah, to highlight what I was about to say earlier, 6,837.90, let's just call it 60, $838 is where the next resistance is, if you will, the major support resistance level that may come into play. But really what is important right now, let's hyper focus on the levels we're at right now, which, by the way, those who know, these, again, this is a golden pocket, which is a significant level of a Fibonacci retracement scale that basically signifies oftentimes the destination and turnaround point, given the strength and the magnetism of these levels. And these levels are highly acknowledged by the robotic systems or various institutions. So subsequently, let's just call it is for what it is, being very highly acknowledgeable by the institutions, as you can see, very much accurately so. And we're very much aware, me and the institutions apparently, of the very same levels. Wink wink. Weird, right? Because I worked for over a decade, for various institutions, and I know how they think. So in various positions, by the way, from a junior to a senior account manager, that is, if you're wondering. Those who don't know, but that not financial advice. I'm still just a dude on the internet and sharing his opinion and knowledge and know-how and all that crap. So right now, basically, the levels we're at, which is why it was so significant for me to highlight 6,500 multiple times prior to, it is completely, to those who wonder, it is completely insane, utterly bonkers, unbelievable how high the slippage level got this time around. It still is what it is. I was just asked by one of our members, shout out to you there, G. So, no doxing, right? So he was asking about basically the whole structure for look from afar, and it doesn't matter whether we're looking at a continuous structure or whether we're looking at the short-term structure. What we will be able to identify is what we call a double top bull trap, right? It basically is a significant high that we reach, right? A significant high such as as this. I hope you can see it all on the screen right now. Hope it all fits. Yeah, right. So this beautiful thing. Yeah, those who don't know, I'm back to my computer and all that beautiful stuff, and that's why it's also convenient and everything is so wonderful and sounds nice, I hope. Otherwise, please do let me know. And then streaming well and everything. Yeah, all that is because the computer is finally assembled, the PC. My beautiful Asus Z890 Maximus Hero BTF build. Yeah, there you go. All that. Eat all that. Now, back to the market thing. So we were saying basically the double top bull trap kind of looks like so, right? It oftentimes is a significant high with a drop and another significant high higher than the previous high, if you will, another higher high, right? To convince, or rather incentivize all the buyers, the bulls, to start buying in. The market naturally normally finds itself thinking, if the market's going up, then it's going to go up, right? That's kind of how the sentiment develops, which is very wrong. And by the way, that's the same thing the other way around. And you know what? Those who are skeptical about my overall thesis, I'll remind you that I knew that this was coming, that no one did, first of all. Far in advance, in fact, I was warning that we're going to see a significant turnaround. And then when the rest of the majority of the market, which highly correlates to what I'm about to say right now, was convinced that we're going down and roughly around these areas, even the bullest bulls in the market, if you will, were screaming the end of the market is coming, and from here on out, that's it, it's done, and down. And ironically, given that I have a downwards sort of looking position, an SQQQ position, had it back then, by the way, as well, those who wonder. And yes, in my community, in the Discord, I also am completely transparent and post my positions and everything, and various other perks that the members get. So here, where all the bulls were basically convinced that the market is going to drop, because like I said, how the sentiment develops, if we've been falling, that means we're going to continue falling, and even worse, I was basically saying that here we're going to have a rally, and ironically, again, I was the one with the bearish positions. I was objectively saying there will be a rally. I did not expect it to be that high. I did expect it to really kind of stumble and crash out right passing the previous highs, kind of a tiny little bit. We ended up crossing even that, pushing even higher. Why is that? Because the institutions recognize that the retail is dumb. no offense to anyone here, it is what it is. And the longer they see that you guys are throwing money at the market, seeing this as a FOMO opportunity, guess what? They will continue taking money. The way it works is that they pile up a significant amount of money in the market, into positions, to incentivize the retail to think, oh, there's an opportunity here, here's the growing price, while you guys are throwing your money at the market, sort of adding money to that pile, to that table. At the end of the day, they will be the ones to take it all and run away, right? To sort of, get closer to the exit before the rest are ready, and just, take the profits and run away, so to speak. And uncoincidentally so, unceremoniously so, we're starting to see, for example, if we're already looking at the weekly, although this is not necessarily what we want to see. We don't want to see convergence. We don't want to see the forces converging on each other like that, potentially giving way in strength to the bullish momentum here. Sorry. But as you can see, these various sort of tap-ons off and on before the actual breakdown comes about happens quite often, and it's quite a common thing. So it's not going to be all that surprising to see if the forces here will almost close in on each other and then diverge once we cross over and become more bearish, giving way. Basically, this shows that there is still buying, and buying is accelerating slowly, but buying is decelerating in the overall scheme of things, and selling is more dominant, more prominent, and is accelerating. So given enough time, it will, of course, become a little bit more visible, arguably, but still, as you can see, we're already breaking down that 80 range, right? Meaning back from overbought, right? We're stopping that overbought trend. Basically, we're going through a cool down into what would be the body of the stochastic RSI, all the way from 80 to 50, leading to a slowdown in price action, potentially more of a turnaround. And once we cross the 50 range with both forces, we'll see an acceleration to the downside, leading to the 20, which 20, as you guys know, I hope you're not too tired listening and hearing that same sort of crap again and again, because I said it, I think, a million times. We go into oversold territory, which is basically sold on steroids, but sometimes may signify a turnaround. But that depends what we are seeing on the larger time frame, because what we're seeing here has to fall into the framework of what is the larger time frame. Remember, all time frames are basically printing at the same time. It's just the smaller the time frame, the smaller the range that it signifies. The larger the time frame, the larger the range and the process that it signifies, right? Pretty simple. Large, we mean longer duration wise, right? So meaning may last longer and take longer to actually finalize the process, so to speak. Now, as we're seeing here, hints of a deterioration towards, and again, these are just the beginning of, just the buds, so to speak. But let's look and see what is it we can identify on the monthly. Hi, Alex. I'm going to get to your comment in a second, so I cannot read it fully while, going on and on and on. I hope all of you are very attentive and paying attention, because the devil is in the details. Again, this is not some voodoo magic. It's math. Guess what? If you do the math wrong, you come out with wrong answers. This is kind of how it works. And oftentimes the analysts who think they know what they're doing come up with wrong answers and get it wrong. And in fact, even myself, who, well, obviously I think I know what I'm doing, right? And I can get some things wrong sometimes, but overall, arguably, you guys can see and have seen me being more correct than pretty much the rest of the market. Literally, there was nobody here who was smart enough not to be in the market other than maybe, Warren Buffett, right? And, well, again, do you really think you're smarter than him? Even though I acknowledge that I'm maybe as smart as one of his, one of his team members within the technical analysis teams that he probably has, right? Not even confidence. It's just maybe just one of the team members at best. Let's just be realistic about things here, right? Come on. Right, so let's go to the larger time frame here and see what it is that we can see and whether the market is signaling towards a deterioration. And this is very problematic because right now it appears to be that all we're seeing is more of a slowdown, and it's happening above the 50. So this really feels like a bullish impulse, right? I know. The problem is that this is kind of a process to the downside, and so this forces us to see how the monthly, into what framework does this fall on the 3 months. And on the 3 months, we're seeing that very same phenomena that I was trying to highlight, how the momentum is running out. It's almost the same way that you don't go on the highway, the same speed you slow down into in order to park, so to speak, right? Or transition into reverse gear in our case. What we're seeing here is quite significant and very indicative of a wave down, really. If the market is not even able to cross quickly and with clear divergence over that 80 range and starts deteriorating, almost like slowing down and losing momentum over that 80 range, potentially signifies the beginning of a turnaround, which we know again falls under the very same sort of premise, but on a larger scale, which we know. And here, now this is where things get really sketchy. You really need to know and understand where we are, because objectively looking at this, if you're just merely using stochastic RSI, it's very difficult for the naked eye, for the average observer who sees hyper focuses on this part of things, rather than identifying that the market is going this way. It's a downtrend. Within the downtrend, we're basically working our way this uptrend that is coming to an end. And you're like, but really, it's bullish. Right, that's the way the market works and has been working for the last 100 years. The problem is, once it completes that process, which is significant to know where we are in the cycle, it reaches the final leg of the current cycle. And the final leg is the one that normally brings the market down anywhere between 50 to 80+%. So when I say 50, and when I say 3,300, by the way, when I speak about this 3,300 range, which is also a deduction out of technical tools, which is highly already acknowledged and been retested, well, somewhat, but not sufficiently enough, and given how the momentum is panning out to look like, and various relationships between support and resistance levels that do exist on the cyclical side of things, which, by the way, most technical analysts are not familiar with, and I'm one of the few who teaches these things. And this is why it's not such common knowledge. This is why BRK, Warren Buffett's Berkshire Hathaway chooses to liquidate most of their positions. As far as we know, last time we checked, it was anywhere between 70 to 70+% of all their positions have been liquidated already. And I arguably know, because they're allowed to have a delay, probably more so since. So you see, that's my, again, and this is just an added argument. Of course, I would have still had my positions as they are, even if Warren would have not been on the the side of what my analysis is standing as. But it is quite reassuring and comforting to know that the best investor of the planet, of arguably the last 50+ years, is in agreement with what my analysis says. So that it is what it is. Not gonna lie, it is quite comforting and helpful. Now I'm gonna go to the chat. I hope I didn't miss anything too serious, and hopefully I'll go, worst case scenario, I'll go back. So emergency, why? Because it seems to be that we're gaining closer. And then part of it, by the way, I was showing you some of these things on the futures contract, which does show slightly different moving average, which, by the way, those who don't know, these are just basically moving averages of the price action, including the volume that goes in, right? And one of them is slow, so delayed. And oftentimes you will see a very similar pattern, but which you don't identify immediately, that on some of them, and if we're looking at the regular contract, the regular S&P, the regular SPX, it is a little bit clear that we are starting to have that turnaround and the change of direction towards the back end of the trend. And in fact, by the way, something that is good to highlight and notice is how much smaller the candlesticks are getting over time. So at first we are seeing an acceleration, and then we're seeing this almost slow down that you can visibly see via the shrinking candlesticks. Shrinking candlesticks basically signify less change in price over the same period of time. So now I'm going to go over let's see what it is that I can see here. In conflict, I'm teaching dollar cost average. No, it's not in conflict. In fact, first of all, even Tom recently, but partially, of course, with knowing me, acknowledges how the price action has been just completely insane. And he understands. Again, his approach is more so about how you manage your portfolio in such instances. But even he started warning people that this price action doesn't make any sense and overblown out of any proportion, and it will make a lot more sense for it to retrace, come back to what would be fair price, if it's individual assets, if it's overall market. Also, he understands that people such as myself and Warren Buffett are not idiots, and normally it's good to listen to people such as us and identify that conditions match what the technical analysis is implying. And I bet you Tom is not blind to how high, how quickly, how impossibly. And in fact, just the other day I had this exercise in my community. I wasn't asking for negatives because I know all the negatives that are at place right now and then some. I was looking for my community members to point out positives that would justify this sort of price action, and it was dead silence. It was dead silence. We had roughly about 20 members on the meeting, anywhere between I think 15 and 20 members, and no one was able to come up with a singular positive that is significant enough to say, you know what? Yes, this may prevent. And actually, unfortunately, I am aware of a singular significant positive, which the steps that Trump's administration is taking over a longer period of time, if maintained, will bring about a deflationary period, which will bring about a stabilization and normalization of the economy, which subsequently will lead to normalized, of course, prices and a better living quality, if you will, right? To put it in simple terms and combine everything into a singular sort of answer. Tom's teachings. In fact, I don't know, Alex, you've probably been there on Tom's meetings, on his Zoom calls, I hope, which I participate in and oftentimes am a co-host. Recently, in the recent year, I've been participating less, and it's just since Tom and I kind of, have now our separate communities. I have my own stage, so to speak, and it's not necessary. But if it is people, so to speak, badger and ask this question, yes, I do end up answering and speaking and explaining my thesis and how it correlates. Tom and I speak all the time, by the way. We are close friends, and Tom is quite aware of my thesis. And no, it's not in conflict. It maybe is slightly different when it comes to how we would approach the management of our portfolios, but even Tom, in his videos and Zooms and so forth, is saying it's not such a bad idea to liquidate, which, by the way, those who don't know, that 30% liquidation method is something I taught him and explained why that is something that we, the account managers, used to explain that is the most reasonable thing to do in very particular situations. Of course, it fluctuates. It's not an iron rule. It can be anywhere between 30 to 50%. It really depends on your situation and so forth and so forth. So yeah, I'm just sort of explaining, that Tom and I are in agreement about a lot of things. We don't necessarily agree on everything, and it's fine. Part of our friendship and why we are such good friends is because we can agree to disagree. We still share each other's opinions with each other, and explain why and how, and not always we are in agreement in how things should be managed or done. And Tom's approach, given his lifestyle and economic abilities, are basically DCA all the way through. And I can vouch for this. Tom really struggles with the whole idea of trading because Tom he doesn't sell. He does not sell any of his positions. I'm not even kidding. He's loading up and loading up. Tom is one of those guys. One of the reasons I always liked him right away when I sort of started watching him myself as a viewer is that he actually practices what he preaches, what he posts, so to speak. He truly believes in his method, and I can tell you his method, in essence, it is in a way is bulletproof and is correct. The problem is the average retail trader or And it's a whole argument and discussion why everyone is a trader. Very few people are investors. You don't know who's an investor? Ron Barron is an investor. A person who's giving so many of these stocks to his grandchildren, right, as inheritance. So he actually has a vested interest in the company, in Tesla, for this instance, for example, for the Tesla to be successful over the long term, and not just that his stocks are right now at a higher price and he can sell them and make some profit. No, he actually has a vested interest. So he's a true investor in the company. All of us, at the end of the day, we're all long-term traders. But all this is jargon we use in the industry to simplify and explain things to each other in a quicker fashion. My camera has died, I think. I have a feeling, right? My camera has died, and that's not cool. Let me try and turn it back on. See if I can make it work. Why did my camera die? My camera die. Camera die, not good. Camera die, not good. Camera die, not good. Let me see if I can bring it back online. Let me see if I can bring it back online. Okay, yeah, it's back online. Let's see if you guys can see me in the streaming stuff. Hopefully, yeah. I think you guys can see me. Beautiful. So, Cool Beans. Hello, Cool Beans. So where we were, so Tom and I not in such a disagreement as some of you may think. We're in fact in far more of an agreement rather than a disagreement on various things when it comes to where the market is headed and so forth and so forth. But Tom's approach is simple. He simply is going to buy and load the boat as much as he can while the prices are lower and decreasing, because he knows that at the end of the day, may take 10 years or 20, the prices will end up higher, which is 100% correct. Again, the market has proven that to be correct so far and very unlikely to change. The problem is most people cannot endure 10 or 15 or 20 years of pain. And yeah, probably very unlikely 20, even 10 is an exaggeration, but there's a reason why we call, something that takes roughly around that period a lost decade, right? And it doesn't necessarily have to take 10 years. It may last 10, 9, 8, 11, everything within the framework sort of that marginal error or standard deviation of that 10-year mark, which means, anywhere between arguably even 7.5 would be almost like having a lost decade, because, well, while you still start climbing within the first 6 months, which leads into the 8th year, you still feel like you're kind of on the low end of the price action. So believe it or not, it is what it is. Right. So if the market only goes up, why bother DCing? Just buy with all your money. Right. No. But that's not what he's saying. Again, he's trying to, I understand, Casey, I understand what he's trying to ask. Of course. In fact, we both know to some people that's the easy way to go. Some people, such as Tom, which is great, he prefers to raise his kids, spend his time with his family, doing other things, and not being stuck, with his face to the computer, which unfortunately the reality of day traders, literally, this is not of course, not everyone, and you don't have to do this day in, day out. Depends on your methods and various things, and the risk you're willing to take, and knowledge bases that you start with in the first place. All of these things kind of matter. But day traders do spend, numerous hours sitting in front of the computer staring at the screen, as unfortunate, as unpleasant as it is. Right, so remember, just to highlight, we have these factors, we have these factors that we're saying, basically a whole set of support resistance levels that basically are a combination of the very same price levels. I just have them separately in different charts because otherwise it's going to be insanity trying to see everything all together. So I'm kind of using these separate charts to point out and show you how it is that there is a combination of forces right here. Sorry for being scratchy all the time. That hair, believe it or not, when it's in your face, makes everything scratchy. Oh, my entire face scratches. The face. The hair is in the face, and all the time you feel, and sometimes you start hallucinating, feeling like you might be, it gives you tickles on your face. So, yeah, that's why I'm scratching all the time. That's true. Thank you. How are you investing knowing... I'm more so, Alex, I'm more so on the short side of things because I'm more of a swing trader. Normally I do day trade, but right now, given the location where we are in the cycle, it's a very risky place as well. So I don't trade in the recent, actually, couple of years, because this whole process has been just hell for me, literal hell. Some of the members here can tell you I'm quite efficient at recognizing and identifying daily moves, although recently I've been focusing a lot less on that, simply because they are unpredictable as much as they normally are, given the location in the cycle, which is normally, which is arguably, to sort of put in simple terms, is the back end of that bullish long-term wave that we just had all along. It's just the transition into it does contain breakdowns and upwards movements that feel as if we are seeing bullish price action. In reality, we're slowly turning around. It's almost how, how it is to turn around a slow tanker ship. It just turns around. The turnaround radius is very, very big, subsequently very slow. So that's what we're seeing, and I've been, trust me, if you don't think I'm tired of screaming wolf and not seeing the wolf come through the woods and just start tearing everybody apart, it's not fun. I actually wondered about this. People here who are new to the community and don't know, I've worked in the industry for many years, until basically the that 2019 event that happened and brought me to go independent, leading with my friendship with Tom. He advised me to go independent and stay independent and, start a YouTube channel, a community, and so forth and so forth. This is kind of how we ended up where we're at. So I was always wondering, just kind of going back to what I was saying, I was always wondering what it is and how it would feel being like Michael Burry. Because Michael, for a long time, I've been saying and warning everyone how things will get bad, and the fact to the point where his investors started turning on him, and it was just probably hell. It was probably miserable, torturous, day in, day out hell. Why? Because, well, we see the market and feel it day by day, while these sort of events normally manifest themselves a long time prior, sometimes right before they come, but well, depends on your ability and knowledge and know-how when it comes to analysis and proper TA, if you will. And so arguably these things were announcing themselves far further in advance that I wish they would have, and my abilities to identify them are good, but unfortunately to predict that very unpredictable, or rather most volatile part of the cycle, although some of you know actually the bottom of 2019, you can ask Tom about it. I've predicted the bottom of 2019 months in advance, and I ended up being off by mere cents. Maybe, I think it was like 12 cents that I was off, literally, something like that. Months in advance using these very techniques. So to argue that they suddenly stopped working, not the brightest thing. And lots of other things while it was happening. And in fact, this entire rally, back then, again, the very same scenario. Everybody was certain the market would drop and break, but I was predicting a movement to the upside. And so, my prediction was completely different. That's that part of things. I'm sorry for all the ums. I'm thinking what it is. What else is it that I... Also, by the way, we're seeing clear signs on pretty much most of the market, other than Palantir. Although Palantir, if you're closely familiar with its price action, PE, overall sort of structure, what it follows, why it follows what it follows, you'll identify. And you can see, I'm not even deleting this. I'm not shy that I've thought that yes, our breakdown will happen far further. We'll never reach these highs. This is just utter insanity and so overblown out of proportion. I'm just so sorry to tell you how bad this is gonna get eventually, while people really struggle to believe that will be the case. Given the high price that we already got to. And yes, maybe our bottom will move up slightly, which will be to be determined. But even Palantir, with its blown out of proportion prices, we can still identify that it's out of proportions, as we said. It's far too high. What is the sort of overall upcoming direction of the trend, right? Everything, it is almost something that is being signaled on the vastness of the market no matter where you look. The only thing is whether you have one bias or another and whether you're willing to accept what is coming or not, right? That's kind of the only thing that's going on. And so the emergency video here is not to say that, oh, that's it from here on out, it's a downtrend. No, but it is to highlight how conditions are starting to turn around. Now, it's not about what we're seeing on the hourly. That doesn't matter. As you can see, the hourly can flip and become bullish and bearish the same way. We will have uptrends on our way down and will be signaled the very same way right here, right? So, no, here it's something else. We will have well, basically, once we're going to start breaking down, it's going to be something that will appear on the various time frames. Again, we in the technical community, we have completely different tools to use in order to identify how the cycle works. So we start to be more attentive to the larger time frames, to the daily, to the weekly, to the monthly, where it's going to be far more important to be attentive to that overall shift and change in direction, not the 1 minute, 1 hour, even 4 hours. Arguably, anything above the daily, all the way to the quarterly, is where we're going to start to see more and more of these effects come into play. And the same way, oftentimes, we look at what we see right now as is. We say, well, it looks bullish because we're in bullish territory. Right, but what does that mean for the very next step right after what we're doing right now? So for completing that bullish step, which arguably is a double top bull trap, is now completed. The double bull trap, if you can look it up, ends in a miserable breakdown, and that's the whole premise and the whole idea, to entice the bulls to buy in because the sentiment is bullish. If the market's been going up, so it's gonna go up. Well, in reality, we said normally that happens right before the breakdown and turn around, which you can see coincidentally, unceremoniously. So again, we're at the edge of the channels, we're at the edge of the longer duration channels. By the way, this is not a joke. These are channels that have been in acknowledgement since 2015. And yeah, there are furthermore elements to the structure, if you will, that are acknowledged and prove that we're probably about to break further lower from the edge of these channels or combination of forces at which we're at. And remember, it's never a singular force that basically dictates that this breakdown is coming, but rather the combination, the junction of these forces at the very same place. All right? So that is it for today, boys and girls. I hope you enjoyed this. I'm going to try and go back to normal schedule and sort of back to normal, right? I know I've been, again, those who don't know, in fact, let me try and see them. Those who don't know, basically, migraines are irregular blood pressure in the cranium, right? And in the blood vessels in the cranium, and that subsequently sort of leads to, instability in the whole head and all that sort of crap. And it's very unpleasant. And those who don't know, various geological events such as earthquakes, schmurthquakes, volcanoes, basically highly magnetic events can lead to people who are have chronic migraines, can lead to various unpleasantness, and though now you can see maybe, and actually it's been worse lately. This is not even the worst it is. And if this is a website that reflects all the earthquakes and crap that's going on right now, that oftentimes is highly correlated to these magnetic events, on Earth, on the planet, which subsequently lead to affecting how we feel, our blood pressure functions and all that crap. It's a very sort of long chain of things, but that's how it works. And people who have chronic migraines are very well aware of this crap. And normally we don't have so many events. Normally you can maybe see one dot or another in just like active volcanoes, right? But no, what you're seeing right now is a whole bunch of earthquakes left and right. And this is nothing, because lately we've been just having them every single day. And normally we have lots of red dots. It's kind of cute how we don't have any red dots. This is actually not nearly as saturated as we've been having them lately. And it's not surprising for me to be having like a week-long migraine and find out that this is what's going on with the planet. It's like, wait, how? Really? Yeah. I mean, jokes aside, as much as I didn't want to believe that crap, it's actually true. Or at least seems to be true, right? You can, put some hours of research into this. It's pretty interesting. The whole topic is fascinating. Anyway, so as I was about to say, boys and girls, this is it for today. Looks like my voice is about to die anyways. Also, those who don't know, again, let me bring up the thing for the Patreon. Here it is. This is, you go to patreon.com/investory, which now, by the way, is highly discounted. If you want to know what's going on right now, is that I've discounted everything with that BD50 promo, right? So everything is 50% off. And on top of it, here I'm going to show you in half a second, there is a secondary discount. And more so on top of it, if you do choose annual, right? Let me just show it, bring it up to screen in a second. I'm going to brag and show off all that crap. So you go here, you go to patreon.com/investory, or the links are in the description below. Don't forget to smash the like, please. It's free and it means nothing to you, but it really does go a long way for me. And here it is. Let me show you now. Let me remove this promo code. Actually, and this is just only for new members. Unfortunately, I am cooking and working something out for older members and already existent members, right? There are some of the perks, as you can see, Charting 101. This is kind of like basic charting information. But of course, I talk about these things on the weekly meetings, which I'm changing things. I'm going to change things a little bit. Given how Academy is not a part of the tiers here, and yeah, by the way, here it is. If you switch this little thing, you can make it now $24 a month instead of $80. This is supposed to be $80 a month. This tier is $80 a month. Really what it grants you is a little bit more extra perks, but more so 2 meetings a week. And sometimes extra exclusive content that I make that is a little bit more advanced than the regular stuff the basic members get. Basic members don't think that, this tier is not good, is no good. No, it's an amazing tier. We have weekly meetings, members ad-free. I'm so sorry. Members exclusive content, and there's plenty of good stuff that I bring for both tiers. And of course, the Academy members get all of that for free lifetime. Because they are Academy members, they pay a single time $3,000, and now they get all the perks together, right? So again, on the screen right now, that is the promo code if you're required to use it for some reason. Although normally right now, if you are a first-time subscriber, you go there and it automatically applies this and allows you to join in. Now is definitely the time. You learn a whole new skill set that will basically make you independent and will allow you to understand what people like me and Berkshire Hathaway's, Warren Buffett, and various other very good analysts say. So that is it, boys and girls. I love you all. I'll see you in the next one. I'm trying to make the calls. Yeah, I know.